On set, two of our favorite people, Kevin Gordon of Schwab, Francis Donald with RBC Capital Markets. Thank you for joining us.
It's Brian. Nice to see you.
So I'm reading Powell's speech here, Kevin. Higher tariffs have begun to push up prices in some categories of goods. We expect the effects of tariffs to accumulate over coming months with high uncertainty about timing and amounts. I could read this and actually make the case for a rate hike.
Yeah, I mean, I think to me, the speech was all about balance and wanting to assess what the risks are. And, you know, to me, the most important line was assessing the upside risk for inflation, but also the downside risk for the labor market. And that's really the pickle that the Fed has found themselves in for a good chunk of this year. And that's still where they find themselves probably for the remainder of the year.
Markets don't get things wrong. Markets are what they are, right? Yeah. So the markets are reacting, and that's what we've got. But I'm not going to lie, I'm a little surprised by the ebullience, the exuberance of this market reaction.
Well, I mean, if you look at what has been leading, at least initially out of the gate, when I first checked, you know, right after Powell was speaking, it had been more of the riskier speculative parts of the market that tend to benefit when you get, you know, rate cuts. So if it is the case that the market's making a pretty big bet on that, it would seem to be consistent with what leadership has been today. Plus, I think a lot of the move and the reaction has been consistent with the probability that the market had going into September. I mean, going into the speech, you were close to around 80% for a probability of a cut in September. Yeah. That's moved up to 85, 86% to the time we're having this conversation.
But Francis, it's not 100%.
It's not. And listen, I want to be as cheery as markets are today, no question. But we've seen enough evidence from PPI statistics and prices paid statistics that there is tariff inflation coming. I think of it like the tariff Titanic has already hit the inflation iceberg. It's just the band's still playing and it hasn't sunk yet. But that moment is coming for the American economy. Core inflation is going to end the year above 3%. And not just because of tariffs, but because there's also inflation on the services side. So Chair Powell might want that door to be open towards a rate cut in September, but I don't think the inflation data is going to allow him to walk through it.
You just made a really good case for a rate hike, or as I called it a couple days ago, Jackson hold, because you're making the case, Powell's making the case with tariffs and inflation for not cutting rates, and yet the market is, yay, rate cuts.
Well, listen, we're used to that dual mandate moving in the same direction and making that easy, but this isn't easy for the Federal Reserve because they're concerned about labor market. But I might say they might not need to be as concerned about that as they're expressing in this speech via Jackson Hole. The unemployment rate is at 4.2%, exactly where it was a year ago, Brian. So yes, there is a slowdown happening, but Chair Powell himself admitted that there are supply side factors that mean we don't need as much job growth as we did before. So when I listen to this speech, I'm wondering, Chair Powell, what problem are you trying to solve right now? Are you trying to prevent one? And what are the risks right now to this market, to the economy, of moving too early, too quickly versus reacting maybe a little bit later?
I am listen, the markets are going up. People our audience watching and listening, maybe stuck in traffic somewhere, making money today. We like that. Schwab's customers making a lot of money today. Yeah. That said, next week, I think it's next week, don't we get the Fed's preferred inflation gauge, ye old PCE? What happens, Francis, if that number comes in hot next week? Does all this exuberance go away?
Well, all of it, no, but that door that we said is open, well, maybe it starts squeaking shut a little bit. We get a lot of inflation data before that next meeting, PCE, CPI, PPI. But what I find so strange about this is we're all waiting for inflation to show up in the consumer side. But any economist is going to tell you that if tariff inflation is coming, it's showing up in PPI, producer prices, prices paid first, and that's already happened. We're not waiting for that effect to come through. This is why Chair Powell today said we know tariff inflation is coming through, but this is a Federal Reserve that can choose to say we expect that to be, they're not going to say transitory, Brian.
Yeah, don't say that.
They're going to say one-off. They can say we're going to choose to look at it differently, and they can use all measures of inflation if they want to cut. They can say we're looking at CPI X 400 items that exist within it, and therefore that gives us some ability to do it. So this is a Federal Reserve where even if we believe the data is going in this direction, and the three of us here think the Fed should do one thing, we also have to listen to what their bias is, and their bias is clearly they want to cut.